Good evening to all, and a very warm welcome. Of course, in Mumbai, it's quite rainy, so very rainy welcome to all of you are logging in from Mumbai to a session of navigating market shifts with HSBC. My name is Shoibal, and I basically lead the investments and wealth solutions business for HSBC in India. Well, last couple of months have been very, very interesting. If not, very engaging every single day. I think we've undergone some major global challenges. We've also, as a country, faced a very severe issue, and I think globally things are getting more and more uncertain. And I think all of us are looking at every new day and hoping that something adverse doesn't turn up. So it's been a very, very interesting and engaging time. And we are very grateful that in all of this, I think from a financial stroke economy point of view, I think India is always seems to be outshining many other global markets. I think we seem to be very resilient in this environment. And to talk about all of that this evening with me, I'm very, very grateful and very privileged to have with me Prashant Khemka. Prashant, like all of you would know, is a global fund management expert, someone whom we had looked up to when he was with Goldman, and then of course with his venture in White Oak, he has very solidly established himself as a leading fund management house in India. Prashant, thank you for joining us and a very, very warm welcome.
Thank you, Saval. Thank you, everyone, for joining today.
Prashant, I mean, we were talking before we started this session about US, and of course we will ask that question to you. But before we get there, I spoke about how India seems to be a resilient story amongst all of this. You obviously are someone who's very globally connected. You've managed global funds and global markets. You work very closely with global investors. You work very closely with. Give us a sense of how India is still perceived in the global industry as a possible investment destination, and the obvious question to that would be when do you see FIIs really coming back to India in a meaningful manner from here on?
Certainly, Saval. So see, but there are ups and downs always going to be there, but I would say in a very meaningful manner, there hasn't been a negative perception on India, barring some exceptions, let's say worries around demon and the credit crisis and so on. But otherwise, the last time there was a meaningful negative perception of India was during that fragile five and all that, 2012-13 ke time. Since then, it's been generally constructive. Thoda kam, thoda jada, but generally constructive. Now, what flows we see isn't necessarily to be correlated with FIS view on India. And this is the biggest mistake that media in general on CNBC or otherwise any media news channel, the way it is portrayed is the correlation between FII flows and sentiment towards India. That is not true because see, still 75% of the assets that are invested in India by FIIs out of $800 billion, nearly $600 billion is by emerging market funds or non-India specific funds, global equity funds, BRIC funds, Asia funds, and so on and so forth. They are not India dedicated money. So for last several years, globally, investors have been, it's changing right now. Let's hope it sustains. This year is a little different, but last 2 months is a little different, I would say. But the investor sentiment towards emerging markets was negative. And emerging markets were seeing big outflows. So, Joe, out of $800 billion, that $600 billion bucket was seeing big outflows. And in India, automatically would see outflows from that. So 600 is not entire EM. 600 is India. So 600 ka, 5 to 10 times, call it 7 times, 8 times would be the EM bucket. So 600 billion ka, if you multiply by 6-7 times, that's like $4 trillion invested in EM. That is showing outflows. But if that is seeing outflows, automatically India would also have to be trimmed because a EM manager cannot just sell from China, Taiwan, and everywhere and not sell from India.
India.
Right? They have to sell proportionately across their portfolio. So those outflows were dominating. The India specific, there were inflows over this last many years. But because of EM and global equity outflows, they were overwhelming. And that's why you see the FII number. So now also when you ask me when the mood would change, a lot of it I mean, when FII flows would change materially, आपने देखा होगा, it's stabilized now. There are certain days positive, certain days negative, it's no longer uniform.
Correct. Correct.
It depends on how is the mood towards EM as well as India, but EM also is important factor. So last October, what happened was China rallied 35%. So within EM, a lot of people who were underweight China, they had to add to China. That's why they trimmed rest of EM portfolio, including India, but also Taiwan, Korea, and so on, to invest in China. And then after Trump won in November, everyone in the world wanted more exposure to the US in every asset class. So they were selling
Yeah.
every asset class to move to US in their respective asset class, and that's why EM was also being sold. To say then after China, then this Trump effect, January, February, that lasted, and then people again, because of Trump's antics, people started questioning the whole US exceptionalism story, and then they took a pause. Okay, maybe we should not go so long on US, and then EM started outperforming as a result. Once whatever starts outperforming, people rush towards that.
Mm.
Global institutions, HNIs, everyone here on the call, retail investors, nobody is different. People chase performance everywhere. No matter what they say, that's the reality, at least collectively. Yeah. So once EM starts outperforming, people are now back to, inflows in EM have improved over the last few weeks. We have our EM fund as well. We have seen one of the strongest inflows in last 3 years in our EM fund because people are now pausing on US and so let's also look at the opportunity in EM.
So, Prashant, if I could paraphrase this, you're basically saying one, there's never really been anything which is not constructive about India, which has really been spoken about in the last 6, 8 months.
Yeah, absolutely.
Yeah. Second, what you're saying is that what we see now as an outflow in India is actually an outflow from EM basis what's happening globally and in US.
Yes.
It is not necessarily a reflection of India's performance or even EM performance for that matter.
India dedicated flows is not what is whipping it. It is more EM
Interesting.
flows that are
Really automatically having an impact on India, given that there is a share of India in that entire space. You spoke about US, Prashant, and the obvious question is going to be around US. There has already been a lot of conversation around tariff, not to mention that confusion and as to how countries should react. But do give us your perspective, Prashant. What has tariff meant, largely from a US perspective? Because a lot of our investors are also investors in the US. And then what does it mean for EM and, of course, specifically for India? And how do you see this playing out over this year?
certainly it's a very exciting to see how the tariff is. And look, by the way, our team has been quite consistent on this even before tariffs and through the huge volatility during tariffs and all that. We were quite sanguine that this tariffs thing is more of an opportunity, if you will, or it's not like some people were comparing it to 1930 depression, others were comparing to global financial crisis. It's all seemed way over. We don't usually have strong views on macro developments, but around tariffs, the volatility seemed to be just overdone. Now, that aside, now let's talk about how we see tariffs. First of all, few things. First, lived 11 years in the US, maybe partly because of that, but otherwise, I am in agreement with Trump on one matter subject is that yes, the worldwide countries have to different extent abused, maybe too strong a word, but let's say America has let itself been taken advantage of for a variety of other benefits that it saw, like I mean, usually at UN, when US proposes something, not many countries
Correct.
oppose, right?
Correct.
Lesotho, a country where he slapped a lot of duties on, isn't going to oppose US when 50% of the economy is dependent on US, right? So US, it was like a very wealthy or the richest person in a small town which was doing a little bit of philanthropy, but in return everyone was highly respecting them, and that was the status quo. China was the biggest, has always been the biggest abuser of the US China trade because yeah, but they're exporting everything to US, Whereas when it comes to Google, they have their own Baidu. They don't let Google do business in China. They don't let Amazon do business in China, right? For national security or whatever pretext, right? And Europe is the biggest beneficiary of NATO, but they don't provide that much of, now they've increased. They were doing less than 2% of their European budgets were towards defense and NATO spending. Trump asked them to make 5%. From under 2%, 5%. Initially, everyone was shocked. Now they're talking about 5% contribution. So, what Trump is doing, when viewed from a US perspective, is not unreasonable. Yeah, be it China or be it EU, because they were disproportionately benefiting. Obviously, his negotiating tactics are different. He starts with like this, all this tariff chart and all that. India, anyways, has not been a beneficiary of that to that extent, because we've not taken advantage of US as China has taken or as EU has taken. So was never, amongst the top impact on tariffs. But yes, India ka this problem is that India is the tariff king of the world. India's only solution to whatever shortcomings we may have in this in our on our industry side and our policies front is to put more tariff on imports so that consumers are forced to buy Indian,
Indeed.
if you will. So I think just like in early 90s, IMF forced India's hand to liberalize and privatize. I'm actually happy if something like Trump tariff would force India to reduce tariffs, and that would lead to Indians are very competitive in our financial sector. It was worried that the JP Morgans and Goldman Sachs and all would come and in asset management business or broking business they'll conquer the world. That's why they were precluded till 1990. I mean, they've come 35 years later. Indian firms dominate the market. Yeah, so we
Correct.
shouldn't be that worried about at this day and age. We should be worried about foreign competition. So overall, our view on tariffs is India is a relative beneficiary. If their tariffs are implemented as they were announced, India would be a beneficiary. If they are implemented in proportion to what they were announced, let's say everything is going to be cut down, they're not going to be implemented the way they've announced. Let's say all the tariffs are reduced by 80% from what they're announced, still India would be a beneficiary. India would have been a bigger relative beneficiary if the tariffs are higher.
I,
150 on
Interesting.
China, 26 on India. Near term, maybe some problem, but we'll benefit a lot compared to China. We'll gain a lot of market share over time. But 150 is not going to stick. If that comes down to 30, as interim is there, India may also come down from 26 to 10, 12 something. Relatively, we are still going to be better off, is my view. And US, I think it is logical. You can argue against the means by which Trump seeks to accomplish it. But
Right.
to stop the abuse at some point made sense.
Interesting. Interesting perspective. Prashant, then you talked about China, and I think for a while, India, of course, has been in many manner positioning it as an alternative to China, right? In some manner. I mean, do you think the tariff actually gives it an opportunity to really realize some of this? And if yes, then what do you think India should be doing at this point in time?
See, alternative is too strong a word, obviously, because China is, to just give you perspective, in toys trading, in global exports, in toys market, China is 66 point something percent of the global market share. 66 point something. Can you guess what is India, Cyber?
No idea.
A wild guess.
Should be some 1% or something like that.
You are right. You're very right. It is somewhat,
Really?
it is 0.2%. China
Hmm.
in the world of toy exports is 300 and something times, 320, 30 times bigger than India. Now,
Whoa.
can India be an alternative to China? No,
That's
it's
not-
too strong a word. India can, if these tariffs on China may slow down China's growth going forward, or if they lose 1% market share, तो 66 का 65 हो जाएगा. 1% market share ka if India can gain 10-20% market of that 1%, because Vietnam, Thailand, Indonesia, Turkey, all of those guys would gain. If
Right.
we can gain 10-20% of that, our toy industry would go 50 to 100%. Yeah. So in different toys is an extreme example, but even in textiles, China's 10 times bigger than us. We are 2 to 4%, China's 30 to 35%. In electronics, China is far bigger. Like possibly I haven't seen now. India's, with all this Make in India policy, PLI, Apple has been huge for India advertisement. It's not just Apple's business, but when Apple sets up manufacturing in India, it sends a very powerful message to companies worldwide. Apple stands for quality. And India, there was a perception India and quality don't go together in many
True.
things. There was a
Mhm.
perception. But if Apple can produce Apple iPhones in India, then that would change that perception and would make people board of not people as in common man, also common man, but board of directors and senior management of leading manufacturing companies in the world would be prompted to rethink that we can produce high quality in India. So that would come to that would has been benefiting. So different sectors at different levels, India would, regardless of where tariffs settles. However, India is already benefiting what Trump has done. And even before Trump's election, people would ask me whether Trump's election is good for India, bad for India. I always say Trump may be bad for humanity, he's good for India. And the reason is because his entire one thing you can be sure about Trump is anti-China. And I hope it stays that way because he keeps changing himself. Because what is anti-China does benefit India on a relative basis.
Yeah.
See, tariffs, even if he goes back to the old tariffs, doesn't change anything. Still, it will help India because he's highlighted a major risk to corporates worldwide. If not Trump, next time JD Vance, or he has created a new political ideology in US. And not now, he started this 2015. And India is benefiting in its manufacturing since 2015 because that new political ideology that he started from his primaries in 2015 when he stood for Republican candidacy was that anti-China ideology. And because he was successful first time and he's successful second time, it is like any politics in any country. An ideology succeeds, everyone follows that. All politicians, there is a
Correct.
strong
Correct.
following of that ideology. So now next time someone who wants to run for presidency from Republican Party, they'll be even more anti-China to win that. So that helps because that means corporates have to worry about diversifying. And when they think about diversifying away, they would not shift away from China, but incrementally they have to diversify. And India is one of the most compelling opportunities besides Vietnam, Thailand, Indonesia, and so on and so forth.
Super, Prashant, great perspective. Obviously, good to hear that India benefits from whatever is happening in the US. Since we're talking about India, Prashant, of course, the obvious question, especially from someone like you, is you are looking at India in a broadly outside in kind of a view. You obviously have a
Inside
perspective
in
which
and outside in.
and, and outside in. You know, of course, we as Indians and being in India, we are perpetually very optimistic about India, and you know, every year we think we'll get a new benchmark. So that notwithstanding, when you look at Indian equity markets, Prashant, what's your sense? How do you see this market evolving? Obviously, in the future, but before that, do you see the market has already evolved over the last 3 4 years into a more matured market to see deepening, and then of course some of the areas from a long-term point of view, how do you sort of view the Indian market?
Certainly. Now, Saibal, you've been in the market for very long yourself. So I would say 3 4 years is a very short time period for maturing of a market. But yes, it's a more of a generational thing or over decades it does. I was fortunate in that I started at very early age in the Indian markets. I got fascinated in 1985 when the markets went up 100%. So जब वो Harshad Mehta got hooked into the market, I also got hooked in. He became more famous and he made more money uh, than I did, but it was the same time frame. I assume a lot of people, if people on the call haven't seen that TV series, Scam 92, I would recommend you all to do. See, I've seen it twice, and I'm going to see it again. My kids love it as well. But so over years, India is maturing, and over 4 decades, it has maturing means okay, it is becoming a more efficient. The most exciting part about Indian market, and we invest across EM. I have invested for 8 years in US and developed markets as well. I lived 11 years in the US, but 100% of my money was invested. My personal wealth was invested in India, though I was managing money for clients in US. And the reason was not necessarily because I believed India would outperform. I've never had that view that one country would outperform the other. Yeah, but necessarily. I assume India and US would perform in line. But the reason to invest 100% in India is because India is so inefficient. At that time, I used to think my 15-20% 15-20% outperformance I'm going to get in India. In US, you can't get even 2-3% outperformance. Yeah, you can call it overconfidence, but I thought 15-20% was imminently doable at the time. That 15-20% confidence abhi hona is difficult because India has become more efficient. There are so many more people in the industry, so many PMSs, AIFs, mutual funds have started. At that time, the market wasn't as institutionalized. But still, India remains one of the most inefficient market in the world. And plus, there's a very rich mix of small and mid caps that makes it very exciting and a fertile ground for alpha generation. That remains India's most exciting element in my view.
So India remains an alpha market, and that's an opportunity basically for investors and for investment managers, I guess.
Absolutely true.
Interesting. And when you look at India and India as an alpha market, what kind of sectors, specific areas do you see of interest?
Excellent, Saibal. So see, again, in EM, we have higher allocation in our portfolio in India. So clients say, okay, you are Indian, that's why you like India more. You think it will outperform. That's why you have higher allocation in India. I say no. I, I have always believed India and China and Vietnam and Thailand and Mexico and all will give the same returns going forward in dollar terms. But I've always invested a lot more in India, not because I believe India will outperform. And this is a subtle point, but I want everyone to please, pay attention to this one. I don't believe India will outperform China or Mexico or any other country. In the past, it has done, but that is past. But I allocate more to India because of the high alpha potential in India. This is more inefficient, mid, small, this, that, and the other is better opportunity in India. It's a more fertile ground for hunting for alpha. Similarly, in to your question on what sectors and what areas, first of all, small and mid caps are more fertile grounds for alpha generation. अभी आपको एच डी एफ सी बैंक ICICI बैंक में एन एनालिस्ट कांट और या हिंदुस्तान यूनिलीवर में या ऐसा कोई स्टेट बैंक ऑफ इंडिया में एन एनालिस्ट कैन नॉट कम एंड टेल यू कि देयर इज 150% अपसाइड इन दिस स्टॉक. They might have forgotten to split the bonus, adjust the yoga, then it's a different thing. Otherwise, you can't have 150% upside in a Hindustan Unilever stock if you're logically building the model. But in a small cap stock, you from time and again come across opportunities where you build the model, logically discuss it within the team, and come to conclusion that there is 100+% upside in this stock. You may be proven wrong later on, but many of them will be proven right also. So in small and mid, there's always higher opportunity for alpha generation. As an aggregate, small caps would deliver same return as large caps. Historically also that's been the case. Again, unless you start from a different, you can always cherry pick the time from where small caps have done well. But over time, just like different markets are to be expected to provide the same return, different countries, market cap segment or small, mid, large should be expected to provide the same return. But alpha potential in small caps is far higher than in large caps. So that is one. So we tend to have higher exposure to small caps and mid caps in our portfolio than large cap for this reason. Now, sectorally also there is difference in alpha generation potential. There are certain sectors where there are much larger number of small and mid caps, as an example. Yeah. Whereas certain sectors like energy sector, mein, there are very few, handful of names, maybe a dozen, and they're all large caps and mega caps. You all know those names.
Correct,
SOEs hai
correct.
aur ek private company hai. We all know those names. Yeah. Telecoms में तो अभी गिनती के बचे हैं. So there is, and they're large caps. Even they may survive or not survive, but they're still large caps.
Large caps.
Right? वैसे, there is other sectors like healthcare. Since we are going to be talking about health, healthcare is one of the best sectors from alpha generation perspective. In fact, I'll say it is the best sector for alpha generation because it has, I'll have to count, but I believe that is true. It has the largest number of small and mid cap companies as a proportion to the total number of companies in that. I think there are some out of 105, 106 names in healthcare sector broadly that we have in our universe. There are 99 of them are small and mid caps. Very few larger caps. So it's a rich, very rich opportunity set to hunt for alpha. Yeah. And obviously our team that we put in, and when we see such opportunity, we put in the best team to play. to work at it. We have a 7-member healthcare team. Many of the firms don't have 7-member entire investment team, and I'm not counting myself in those 7 members because I'm not a, as much of a expert in healthcare. It's a technically more involved field. Itna sab, the name of the medicines, neither can you pronounce the name of the medicines nor can you pronounce the name of the diseases, right? It's a technically challenging field. So domain expertise is very crucial. So we have people, Manoj, my colleague who's with us on this call, he's got 28, 29 years of experience in the industry, of which 11 years he worked in the industry at very senior levels at places like Cipla and IPCA, where he was regional head of sales and then was national head of sales in sales and marketing at IPCA and so on. Then he one day decided his passion is for equities and quit that very high profile job and moved to the industry. So perfect fit for exploiting. And not only just not enough to have technical knowledge, how to translate that into analysis and judgment and exciting stock picking opportunity is very crucial. Otherwise, all the doctors would have been the best stock pickers in healthcare industry, which isn't the case. So, and Dhiresh, who's the other senior lead on the team, he was for 10 years with me at Goldman, heading this healthcare sector over there. And there are 5 other team members who are also there, not to go into each individual's background, but very, very accomplished team. With Dhiresh with 18, 19 years of experience, Manoj with 28, 29 years of experience, and the other folks. And we have the best team, more than 60 years of, I think, 50, 60 years of experience in healthcare. And I think second to none in the industry anywhere, the team that we have.
No, thanks, Prashant. I think you make a very, 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 very strong case for healthcare and also bring Manoj in. So, Manoj, I think my question now would be to you. Manoj, give us a sense of what we really mean by healthcare, because frankly, Manoj and Prashant, Ashish was here yesterday at our office, and we're talking about healthcare, and I think he gave some very interesting insights, saying the way we look at healthcare is it's a much wider, deeper topic than what we believe it to be. So, Manoj, first question to you: what really do we mean when we say healthcare, especially in the India context? If you could share with us.
Sure, Sebal, and thank you very much for obviously inviting us and asking this question. So I would say, unfortunately, when people talk about healthcare in India, I think healthcare starts and ends with just generic pharma companies, because that's the only thing which people think about healthcare, and that may be true because for a larger part of the market universe, almost like 80-85% was primarily the generic companies, the likes of Sun Pharma, Dr. Reddy's and Lupin. But today, healthcare is a much broader segment. So when you think about healthcare, it's not only just generic pharma companies, but you have services business like hospital, diagnostic businesses out there. Then you have contract research outsourcing, contract drug manufacturing outsourcing, medical technology. Obviously, medtech is just relatively a new name. There are only a handful of the companies, but I think, again, given the kind of opportunities which are there in India, you will see more and more companies coming for the listing over time. So it has become a much wider segment, and even like what Prashant was highlighting, that out of 105 companies which are there as a part of the healthcare universe, there are 99 companies which are in mid and small cap segments. Absolutely a very fertile grounds for seeking alpha or for generating alpha, but you need to have a very large and resourceful and dedicated team. So just talking about that, Sibal, I think it's a much wider sector than just maybe a few companies in the generic space out there.
And I would just add, Manoj is too, humble to say that, but in our portfolios over the last 8 years, healthcare has been a phenomenal alpha generator under Manoj's leadership. If you look at per unit of capital, the alpha generated in healthcare is possibly, I don't have the numbers at the top of my head, but we'll check and get back. But it is the highest, I believe, in the
Yeah, indeed.
because the alpha opportunity set is very high, and the team is highly capable of exploiting that. In a alpha fertile land, it becomes even more remunerative to have a very strong team, if you will. And also, by the way, I would add, since AIF is a cat too, we've had good success in investing in some of the unlisted names, or just not unlisted is not the right word, but soon to IPO names in our portfolio. Certain of our portfolios over the last 6 years, we have invested in opportunities just before they go IPO, and that is even more inefficient segment than small caps, and
Correct.
that's very in that segment also there are large number of healthcare opportunities that are coming up, healthcare and chemicals also, because APIs and whatnot, they have they are within the pharma food chain.
Yeah.
Interesting. Interesting. Manoj, when you spoke about med tech slightly, but I just want to sort of dive into that. I think given the rise of AI, etc., there's of course this entire question saying, is AI going to impact healthcare, etc.? Any perspective on that?
No, so I would say that obviously AI is and definitely going to have a role to play within healthcare ecosystem, including medtech and even in drug discovery space and all those things, right? Because today, when you look at in the early drug discovery, there's a large database which obviously company has to think when they think about any new potential target to address specific disease. So I would say there will be an embedded value of AI more so in terms of drug discoveries. And when it comes to from a medtech perspective, it could be more about, I would say, the radiology part of the market, like imaging, where you go for CT scan or you go for MRI scan. Definitely, you are seeing that because you will be able to collect large data, and from there you can emphasize, take out in terms of what is relevant from a disease perspective. So there's going to be a role. Healthcare in general is a bit slow to adapt newer technologies compared to maybe the other sectors out there. But we are seeing incrementally. I think probably the role for AIs to be there in the healthcare sector.
Interesting. Manoj, I mean, we of course spoke earlier about how India is in a position to really capitalize on what's happening around the world. From a specific perspective of healthcare, pharma as an industry, do you see India really having a head start here? Do you see a differential that India could sort of have at this point in time on a healthcare and ancillary industries at this point in time?
So, Sibyl, like if you look at in terms of healthcare in India, it is truly a multi-year structural growth story because of under-penetrated kind of infrastructure what we have in India today, right? In whatever parameters you talk about, whether beds per thousand populations or doctor per thousands, or maybe in terms of per capita spend on healthcare, forget about developed markets. Like our spending on healthcare probably compared to other emerging markets, maybe like of Bangladesh or Mexico, we are much lower out there. And that's where when you think about in terms of the potential of growth in this sector, and that's what Prashant has highlighted, that it is probably one of the most fertile ground in terms of alpha generation, because there's a huge potential. The healthcare spend in India has been growing in a multiple of 1.5 to 1.6x of obviously the GDP growth out there. And I think post-COVID, there are a couple of factors which have really led further acceleration in the growth because people have become a lot more aware about their well-beings, and that has led to rising penetrations of insurance. The second is you look at the disease profile. Today, India has become maybe the world capital of diabetic population. Unfortunate, but that's the reality. Similarly, when you think about hypertension, probably we have one of the largest number of people suffering from hypertension. And these are the diseases where you need a lifelong kind of a medicines out there, right? And the third thing I would like to highlight is also with rising per capita income and aging populations. I think these are the two again drivers for the growth in the healthcare spending or healthcare industries, because aged person maybe with 50 plus kind of an age consume 2.5 times more medicines than what a younger person would be consuming. And as probably you'll see the population going towards that aging today, obviously we have a socioeconomic dividend or demography because of younger population. But as the population become going aging, you will see more consumption of the medicines. And the fourth is the per capita income. As the per capita increases, after maybe taking care of your basic needs of whatever food, shelter, so on and so forth, every incremental money which is there in the hands of the people, they tends to spend on the well-beings of themselves. Right. So I would say there are strong drivers in terms of probably a more secular kind of growth stories. And that's what we are seeing that this sector has been, if you look at in the longer term, take around healthcare, in fact, serve dual purpose out there. So when you look at 15, 20 years kind of data, healthcare has been able to outperform the broader markets, whether you talk about BSE 500 or Nifty 50. But when it comes to uncertain time like COVID or maybe global financial crisis, etc., it has a very little correlation with the market, and hence it
Okay.
acts as a has a got that kind of defensive nature during uncertain time. But when markets are going up, obviously it tends to participate in that uptrend. So obviously it provides a very balanced kind of I would say edge in the portfolio for the investors from that perspective.
That's very, very interesting. I think that's indeed a very interesting perspective. Prashant, I'm already getting a few questions live, so I'll come to you with again one of the obvious questions at this point in time. The question reads: Gap between 10-year benchmark yield in the US and in India is at an all-time low. How is the same expected to impact the markets in India?
So देखिए, this is above my pay grade. I'm neither a highly paid economist nor a highly paid strategist like those at HSBC. Possibly can do a much better job at answering that. We stay focused on stock picking, sir. The thing is, while I know what you're saying is true, there is no way that I've figured out that I can make money from it. And there is no way that any retail investor or HNI can also make money out of it, in my limited understanding and opinion. That's why I haven't spent much time on it beyond what, just basically knowing the fact. Okay, this is the case. Yeah, so I'm sorry, I'm not answering the question, but it's just that I don't want to. I can always make up a story. That much I know after so many years of experience how to make up a story. But I won't be adding much value to what is
I guess
posts that have been written about it.
Prashant, I mean, I guess what happens is sometimes we just get carried away with the news and the noise around some of these things. Like you said, I mean, some of this may not be relevant to us or in the business that we are in. I mean, some of these things may not have any impact. You're right, Prashant. Thanks for being so candid. Manoj, to you, I guess we spoke about how healthcare could be a defensive play at a time when markets could be on a downturn, and then it also participates in the growth opportunity when the markets are going up. From a customer's point of view, why would an AIF be a good play to be in the healthcare opportunity? Should we not look at direct stocks, or should we not look at primarily publicly listed equity to buy into?
So I think, Sival, as Prashant was highlighting earlier, that healthcare is a bit technical sector, and you need technical people to analyze and add value to that. Like, for example, if someone has any disease, right, the question is whether you go to a doctor or you go to maybe a layman person out there. Sorry, but I'm just using this example. So this is a technical sector where you need people who can understand the sector maybe much more in depth. Like as I said it, and Prashant has alluded or has indicated that healthcare indeed has been probably for us has been the highest alpha generating sector in terms of per dollar of investment what we have made since inception, right? So a healthcare itself has a higher alpha generation opportunities, and within that, if it is being managed by people who can understand it better, I think the alpha could be further added out there. That's one part of this. Secondly, as we said that here in this AIF strategy which we have launched along with HSBC, we can participate in the pre-IPO or unlisted space, which you maybe as an individual investor may or may not be able to do so,
Right.
right? And here today, like let's take an example, Sable. Maybe 5 years ago, there used to be only 2 or 3 hospitals chain in India which were listed. It's not that hospitals were not there earlier, but it was only Apollo or Fortis. Today you have 50 hospital chains which have got listed in the market. But yet, the second largest chain in India, which is Manipal Hospital, they are still unlisted. So there is a lot of opportunities in the space itself, like whether you talk about hospitals, you talk about medical technology, medtech businesses, like consumable medtech business, etc., where there's a limitation to participate, and you as an investor may or may not have access to those companies. But here, given that we have that opportunity to participate, and given the track record of Vitalk team over the last 7 years, where we have participated more than maybe 58 pre-IPO or IPO opportunities over the 7 years. One of our funds, which is London listed vehicle, we had opportunity to participate out there, and team has given fabulous returns out there. And we do believe that probably this vehicle will provide those kind of opportunities to the investors to participate and invest through this AIF.
Yeah, it would
So
be eligible. It would be eligible because AIF as a structure can participate in pre-IPO opportunities as well.
no, very so Manoj, if I could summarize, you're basically saying healthcare a great opportunity, AIF a great vehicle because you are able to basically look at opportunity both in the listed and unlisted space. Three, you're saying that Vitalk has had substantial amount of experience in managing this segment, both from a healthcare as an opportunity and of course unlisted as a space in which you could look at opportunities, and that basically makes it a very unique proposition when we take it to our clients. Great, thanks. I think that definitely is a good pitch for us to talk to. I'm sure the clients here would also be happy to hear that. Prashant, I'll come to you on a slightly more generic question again, taking it from one of the questions I've received on the message here. You of course spoke about the opportunity that small and mid caps generate in India. It is a fact now that over the last 7-8 months there has been a huge amount of conversation around both of these sectors in segments in many different ways. I think overvaluation, we are still overexposed. And what Prashant is your real analysis of this? Is the opportunity still there? Should clients who are on the call, basically, one of them is saying that should we increase the percentage of investment in small and mid cap? So give us a bit of perspective from a broader market, especially on these two segments.
Small and mid caps. So let's say we combine it into mid caps because it tended to be similarly moved in the market. So see a lot of excess. First of all, market wide in aggregate, we've always maintained that there's no excess that we see in the market. In fact, after Lehman crisis, we haven't had a bubble, in my view, across market. Uske pehle, every 8 years we were having a bubble. 85 mein bubble, 92 mein bubble, 2000 mein .com bubble, and then GFC ke pehle, that bubble. Yeah, EM and all that bubble. But the shock after GFC was so deep, we haven't had a bubble of that proportion in the last 18 years. But yes, we had a mini bubble in the small and mid cap that was in 2000, end of 2017 that broke. So from 13 it started till 2017 and January 2018 it broke. Then obviously collapsed in 19 and bottomed out in March 20 at COVID time. And since then, again, small and mid caps had an unfettered rally more or less with some pause in between in 22 time frame till March 23. And so yes, there were excess built in small and mid cap, but it wasn't across board. It was fairly narrow. PSU, small and mid cap, all kinds of PSUs did extraordinarily well. Then obviously manufacturing, defense, some such select, power, energy, anything related to these, segments did extraordinarily well. But if you see consumer, small caps didn't really do as a group. Obviously, individual names might have done well, whether it's consumer durables or consumer staples, or even healthcare has been mixed. Some because it's again, when I say mixed, it's good, which means some did very poorly, others did extraordinarily well. Yeah. And because again, from that alpha potential that I talked about, it's hard in healthcare to identify losers and winners. So they can in any market there can be an alpha opportunity. So it was a mixed in small and mid cap. Few pockets did get very carried away. Small cap banks, there was no bull run. Forget about euphoria. There was no participation in the small mid cap rally. So banking में नहीं हुआ, consumption में there was no such phenomenon, healthcare में there was no such universal phenomenon. It was certain pockets, and that's what has happened since earlier this year. Those pockets have somewhat normalized again. So if you look at, there was a big rally from 2000 June 2013 till election when Modi ji got elected. From there, if you see, small and mid caps have always traded at a, or for most part, for some exception in between in 1890, 20, they've traded at a premium, and we are along similar lines. Yeah, you can still argue there is still some excess in the same segments: defense, PSU, power, energy, manufacturing related. There are some there's some higher multiples than historical averages. Now, remains to be seen whether everything that we talked about with the, you know, India's domestic potential as well as maybe tariffs benefiting, manufacturing boom and all that, indigenization of defense, maybe the market is right. Maybe the prospects are so good that the higher numbers are justified, but to the extent that the multiples are extended, it is in those limited range of sectors.
So, Prashant, could we possibly say that opportunity exists in that sector? I think that is a given. Like any other equity opportunity, there are always some which are doing great, some which are not doing great. So we need to do the picking there. Three, you were saying that there are some specific sectors which are getting impacted for various reasons. One just needs to be careful when one's choosing from that sector. Otherwise, opportunity, of course, exists. So it may not be right to paint the entire segment in a particular color.
I agree. Saibal, for example, we have a mutual fund, as you know, right? We were too early. We got an approval to launch. We had applied and got an approval to launch small cap fund in June 23. We said, well, March to June there was a big rally in well, like it seems overdone. Let's not launch at this level. Let's shelve it. They to retail ka gali bahut padta hai. Yeah, so we didn't launch it. Obviously, then they continue to do well. Last year, we didn't launch any defense fund. We didn't launch any manufacturing fund. We didn't launch any energy. A lot of our peers have launched. What did we launch last year? We launched a healthcare fund. We launched a banking sector fund because banking, healthcare hadn't, necessarily banking had gone nowhere. It was really contrarian, and healthcare had done nothing. I don't know exactly, Manoj, but it has not participated in that whole huge rally. So we were in a way contrarian type. We just recently launched quality fund. 5 years quality has been underperforming. You would know well. Yeah, since 2020, quality is in dumps.
Correct.
And we launched quality fund. So we are not, at least if you look at our launches over the last 2-3 years, it would suggest that we are prone to not launch, which has done what has done very well in the market. And we are prone to launch, which is either done poorly or has just been, along with the averages. From a market cap segment, because we are not trying to benefit from defense outperforming compared to others, manufacturing outperforming compared to others. We are trying to find within that sector what's going to do very well. Yeah, and we are not doing defense or manufacturing. We are somewhat worried because itna elevated these levels are. Can there be a huge NAV hit? From that perspective, we have not launched those. So that's what I just wanted to add. And Saibal, whenever you have a minute, I would do. I mean, I think I didn't do justice to the prior question on interest rates. Whatever little view I have, I would like to add half a minute or a minute.
No, sure. I think the point on small and mid cap is well made. Manoj, you want to add something on the?
Yeah, if I can add, like while obviously healthcare has done in line with the market, but now given we have 1 year of our healthcare fund launch under mutual fund, I can say probably that the team has done very well, and they were able to generate around 700 bips kind of alpha in the healthcare space, and probably within 1 year, that was the second best healthcare performing fund. So it's just like money attracts food, and
Over
obviously
time,
as
I'm
it.
very confident. I'm not happy with second best. Okay, I'm not
No.
happy at all with second best. I recognize I'm not worried about it because it's only less than 1 year or 1 year. But I fully expect it to be the best performing healthcare
Yeah,
fund.
it is going to be, but I was just trying to highlight like
Yes.
within 12 months of launch.
You
Uh,
can't beat everyone in every year. Yeah, as you said. But yeah, over reasonable time periods, I do expect it to be the best.
Sure, super. So Prashant, of course, all yours. Please do share
So
your perspective
see,
on this.
just on the interest rates, my point is a there is no way of making money out of this. Huh? If anyone finds anyone with consistency, obviously coin flip mein, there'll always be if you 1,000 people flip coins, someone will get it right 10 times statistically. So I'm ruling out that. Otherwise, you can't make money out of these macro stuff. But my view on that is, see, interest rates with some aberrations are reflection of expectations of inflation over time. Yeah. So if you'll see countries where interest rates are very low, it is countries where inflation is low. Now, inflation is also a reflection of how competitive an economy is. Swiss economy is extremely competitive. Japanese economy is extremely competitive. So competitive means supply dynamics are such that they do keep inflation in check. Yeah.
Yeah.
So that's why these kind of economies tend to have very, very low interest rates. The US is also very competitive. Yeah. But inflation, we all know over the recent years had gotten elevated, and inflation expectations got elevated. And now there are worries about, and when I say inflation, it's not inflation today, it is expectation over many years, maybe decade or longer. Now with Trump's some of these tariffs and all announcements, there is a near term uncertainty. And that's why somewhat, I mean, 420 ka 450 or something, 440 today maybe, some elevation. Now, India over time has seen reduced inflation expectations. In the 90s, inflation was like 7% or. Then, since the turn of the century, India's inflation is about 5% or so. Now, the aspiration with the targets that the central bank said is like more 4%. So over time, as India is becoming, since early 90s with the liberalization and privatization, Indian economy became a lot more competitive than it was before. So inflation and inflation expectations over time would reflect that. And as we become more competitive, higher improved standards of living, I think reasonable to expect inflation would move towards a 4% and then hopefully lower as well, from what we have seen historically, which was 5% since last 25 years and even higher before that. As inflation comes down, then the yield differential over time structurally should come down because the gap of inflation has room to continue to narrow as long as we are on the right path. So narrowing of yields, in a way, to me, is markets, expectation that India would continue to be more competitive over time, over the years, and hence inflation expectations should come down, not a year to year, but over a decadal time frame, because we're talking about 10-year yields. That's where I wanted to just add
No,
that.
as usual, a perspective different than any other. So really appreciate that, Prashant, and thank you for taking time to really give us that answer. Appreciate. Um, we are almost at the end of this rather engaging conversation. Difficult to step away from here, but there's, of course, constraint of time. I think I'll go to Manoj first. Manoj, so last pitch for the healthcare fund. What do you think really stands out? What are the two or three things that we should take back from you?
No, so Sibal, I think, sorry, Sibal, clearly one is obviously, as I said, that healthcare is a multi-year structural growth story in India, which maybe because of multiple reasons, I would say, I've told like it's likely to grow significantly over the next at least decade or so. And there within that healthcare sector, because of its unique characteristics of like outperforming the market when it's going up, but at the same time it provides the defensive characteristics at the time of uncertain time, I would say is a perfect way to participate in the sector, because that's what as an investor one would like to have, that when the market is going up I should do better than the market. when market is going down, my portfolio should fall lesser than the market. So, and that's what obviously this sector will
And
provide you
Manoj
the
is
opportunity.
just to add that one, Manoj is including the alpha element in it. Otherwise, just from healthcare sector, you cannot outperform in up markets and outperform in down markets.
No, I'm talking about alpha versus the market. Yeah.
Portfolio side, yes.
Yeah, portfolio side, right? So obviously relative to the market out there. And third is given that the role for the active managers out here, given this sector is being technical in nature, right? I would say that being an active manager and given there is a large opportunities which are available in mid cap and small cap, which are more fertile ground for alpha generations. And also through this vehicle, we can participate in the pre-IPO opportunities. So we do believe that obviously the alpha generation out here would be higher than what probably the healthcare sector in general and the benchmark out there. And last but not the least, I would say a very strong team on the ground. Again, 7-member teams with collective experience of 65 years. Maybe for other peers, that 7-member would be the total investment team. I feel that White Oak has right to win in this category.
Super. Thanks, Manoj. Prashant, of course, the last words are going to be yours. Again, a quick thought on India and how you see India, and then, of course, how White Oak is planning to sort of build into India.
Well, certainly, see, I have, since I said in 1985, when I first got fascinated, I've always been fully invested. I've only invested in equities, never invested in fixed income. And 100% or thereabouts of whatever liquidity at any point I have is in market. Now, over time, it was always in India. Obviously, at this time, we manage both India and EM. So now it is split between India and EM because EM is also inefficient segment of the market. So I look for inefficiencies in the market. I don't bet on markets. I am convinced about our ability to exploit inefficiencies. Yeah, I don't think anybody has a crystal ball to predict whether China would outperform India or India would outperform US, or finance would outperform healthcare or defense would outperform finance. Those crystal balls nobody has. But one can, there is enough of a crystal ball that I have to ascertain which segments of the market are more inefficient. India is one of the most inefficient market in the world, and hence it is most exciting. And as we said, within that, certain sectors provide a more fertile ground because they may be inefficient because of all the technicalities of certain segments of market, or simply because there are a lot many more small and mid caps in that segment, and so on and so forth. So that's how I approach investing in equity, investing in alpha rich markets or segments of the markets, and never try to time the market.
Super. Thanks a lot, Prashant, for making time this evening and talking to us and our clients. I'm sure this was a very, very engaging conversation. Manoj, thank you for coming in and thank you for making time at the last moment. Really appreciate the perspective. We, of course, will stay engaged. We are very excited about the product. We basically believe it's an opportunity that our clients must participate in. And to our customers, thank you for logging in this afternoon. Like you've heard, us discussing, India remains a great opportunity. Within India, many opportunities are unboxing every day. The healthcare industry in India is really growing at an unprecedented pace. It has got many facets. It's important that we really fully understand it and work with experts who understand that opportunity well. For you, should you be interested in this opportunity or anything else, please reach out to your relationship managers in HSBC to help you navigate the entire investment map in an efficient manner. Again, appreciate you logging in this afternoon, and we'll see you again later. Prashant and Manoj, again, really appreciate.
Thank you, Saibal, for a very engaging session. Thank you, HSBC, and thank you all for joining today. Thank you much.
Thanks a lot.
Thank you very much.
Bye. Thank you.